Hi everyone and welcome to today's morning report on Tuesday the 25th of August with me, Richard Perry, market analyst at Handset Markets. Well, yesterday was dubbed to be Black Monday, and we've had a bit of a rebound today in response to this huge volatility that we saw yesterday. Look at the VIX in the States. We saw the VIX spiking to levels it's not seen since since basically the reaction to the financial crash. And that is just an incredible increase in volatility in the US. Huge one-day rise in that indicator, and just reflects the sort of panic that the markets were coming under yesterday. Stock markets were just sharply lower. Currencies coming under significant moves. You saw for example, the yen strongly strengthening, in the euro. Big move up to the upside, and very, very strong moves that we were seeing pretty much across the board. Interestingly enough, we saw this the treasuries, big safe haven moves yesterday. Treasury yields sharply lower, but they've started to recover today, and that is reflected in these markets that are rebounding today. Interestingly enough, though, I've just focused on in the morning report that the oil price has started to rally a little bit, but as yet nothing really that you can point to. It's just a mere blip on the sort of horizon. Really, it's nothing incredibly strong in terms of a recovery yet. It's just a couple of percent higher on the WTI, so it's nothing that we can really hold our hat to yet. And it'd be interesting to see if these markets are just a little bit of a dead cat bounce, because it sort of seems to be that's what it is at the moment. But I'll focus on the DAX in a minute, which is my chart of the day. But certainly markets are recovering a certain amount of unwinding a certain amount of the volatility that we saw yesterday. Look at that, the dollar that got massively sold off yesterday as that euro was strengthening. That's the dollar index, sharply lower, but again rebounding a little bit as some of these trades unwind. Certainly the euro lower, the yen is lower today as well. So that is pretty much what we're seeing. In terms of what we've got to look forward to today to try and sort of get traders' minds off this, we've got a little bit of US data. We've just actually had the German IFO business climate data, which actually came in slightly positively, which has to a certain extent helped us support the euro, but I think it's going to continue to unwind that huge move higher that we saw in the euro yesterday. Big breakout, and I'll talk about that obviously in a bit. But what else we've got is this afternoon is this US data. We've got let me just find it. Where is it? There. We've got for the Case-Shiller house prices, and that's expected to just rise slightly, interestingly enough, just to pick up again. And that Case-Shiller is a very interesting view on the housing market in the US. So that certainly seems to have sort of started to pick up again. So that is interesting. And then we've got at 3 o'clock, we've got the consumer confidence for the States. Now, last month we actually had a big dip in the consumer confidence, well below expectations, actually falling back to levels not seen since sort of almost a year ago. And the expectation is for 93.4 this month, so a slight improvement on that. But if that again disappoints, and the markets or the survey starts to pick up people who are concerned about this market decline, and the concern of the sort of strength of the dollar, be interesting to see if that has an impact on that survey result. And then also at 3 o'clock we've got the new home sales, which is one of the more important housing data pieces for the US, and that's expected to go nicely back to 510,000 is the expectation there. So again, the housing data in the US remains pretty solid, but that data there could take a little bit of attention away from this rebound that we've got today. But to be honest, the markets are quite focused on more big macro picture stuff from China, and just unwinding that move. And overnight we saw the Asian markets again very volatile, but signs of a slight improvement coming through in the European session. So interesting to see how this one runs through today. Now, as I said, my chart of the day is the DAX. and look at this precipitous sell-off that we've had in the last couple of weeks on the DAX. Massive declines, unwound all of the gains that we saw from January. Actually, the low of 9,338 was completely and utterly unwound all those gains from January. So that was at the nadir of yesterday's selling pressure. But we've had a sharp rebound. Actually, look at the rebound that we've had. About 300 ticks already to the upside, and it continues to unwind this move. And if I just show you how, let me just zoom in. Sort of come back to yesterday's traded high, and that is 9935 as we speak, pretty much. So that's interesting, and that is being tested already. So the next resistance is 10,000 round figure resistance, which was sort of a basis of resistance back from last year, which took a while to get through, really. I'll zoom out again, you can see there, yeah, the basis of resistance from last year, and that will again be a bit of a resistance on the way up. But then we've got this big gap from Friday's close at 10,124 is the interesting gap, I think. And if that's filled, then that could well suggest that if that gap is closed, which is basically closing a gap and filling a gap are two different things. Filling a gap is where you basically just come back to trade, and the gap is filled on an intraday basis, but then the market falls away. That's generally considered to be not a strong reaction, not a positive reaction. But if it's closed and the market trades to a level at which the gap was, and then continues higher and then closes the trading day above that level, that is considered to be a bullish move. So that is, I think, the first line in the sand that we need to watch out for, is closing that gap at 10,124. As I said, if we see that, then that would be a positive reaction, and could well see a continuation of this rebound. The DAX got very oversold, and it is starting to unwind that move. Oversold levels not seen since October, but a buy signal will be seen if you saw the RSI crossing back above 30 now, so it's not far from giving that buy signal, and but you'd want that certainly on a closing basis anyway, before sort of throwing any weight behind it. But it certainly seems as though this DAX is on the rebound. This is the hourly chart. You've had a few couple of strong candles early on. It certainly seems as though this recovery is coming through, but to a certain extent it is just still unwinding the move that we saw. Lot that needs to be done for the bulls to be sort of confident that that recovery is going to continue. So look at the maybe look at the 21-hour moving average, which has been a basis of resistance. Again, that comes in around 10,036. So thereabouts for interesting resistance territory on DAX. See if that rally is going to continue. So I wish you good luck in your trading on DAX today.